Eric Mwade. In this one-on-one mentorship coaching video, we are going to be taking a look at what happens when uniformity fails to take place. So we've been taking a look at how you can use uniformity for turnaround situations. This time, let's take a look at how you can recognize that uniformity is not taking place and actually the stock is not going to do what you thought it was going to do. So let's go back and draw a straight line. So this is the RSI, of course. So we've stripped everything out of this argument, no price, nothing. This is the RSI. And so what we're going to do here is we see that we can argue that the price, now when you're drawing this line, you just want to find the break. So we can say the break of the RSI broke down here, and we're assuming, just for the sake of the video here, that the prices did plunge after this. So coming off the highs, prices went down after the RSI broke down there. So this is where the RSI got in trouble, got admitted to the hospital. And so what we do is we draw a straight line like that. And of course we can see in this example I've set it up such that this is uniformity. So if the stock came back and pushed the RSI here and stalled with uniform action, it's uniform action because it touched the line and moved back. It can't get any more uniform than that. Then that becomes a sell signal and you can sell the stock for a swing trade. Now we are assuming that this is daily or weekly, even though you can use this on any time frame, including hourlies and monthly charts. So this can work on any time frame. And we'll take a look at some examples later on. So this is a break. So what we're discussing here is what happens, for example, if down the road the stock comes here and moves above, and then just when it looked like it was forming a nice U-type, inverted U-type formation for another sell signal, it does something like that. And the answer is very simple. If the stock was just looking like it was going to do uniform action above the line and back below it, then that would be a sell signal. But in this instant, uniformity has not taken place. In fact, there's nothing uniform there. What the stock is saying is that unlike previously where it came here and made a high or a short-term high, so unlike previously when it came here, touched the line with uniform activity and came back, in this example we went up, looked like we were forming uniformity, we're coming down but did not accomplish and complete the uniformity action, and we went higher. So whenever you see uniformity not being observed, it generally means that the opposite is going to take place. So we were expecting a sell signal, but because there's no uniformity, what happens is that the stock actually starts moving higher, and I'll show you examples of that. Let's take that off. So let's just do this again, because there's many ways to look at this. It's actually more simpler than it seems. I know it sounds a little bit complicated, but so in this example, this is what's going on. What if the stock would come here, touch that one couple of trading sessions or periods, and then break out? If it breaks out, now it's trading in this area, that becomes a buy signal because the area that was resistance has been violated to the upside, and now the stock should be blasting to the upside. Keep in mind you can use this method also for timing entries into a stock during a rebound. Here we are discussing timing entries into a stock that you think is going to be finding resistance on the upside and is going to be pulling back. So we can flip this around and you'll find that this is also useful. For example, when it's just you have a, so let's say the RSI was doing something like that, broke out, stock did well, came back, touched the line, uniform activity, came back, and now settled here. So the line we would draw would be, so this line, if you're trying to find a rebound candidate, there. So in this example, here's your rebound because the stock comes back to the ideal buy point on the RSI, so you buy there. But now in the future, what happens if you are thinking this was going to be another reason to buy the stock, and it touched that, and while you were expecting it to recover, it broke down? Now the break, that subtle small break, is a sell signal, because what should be support is now not being respected by the market, and the market is saying that it is not finding support there, and more than likely you're gonna see lower prices. So on the way up, you expect uniformity. If it takes place, it's a sell signal. But if it's not uniform action, if you find, so let's just take that off, and I was gonna say that you can find many ways that the market does. There's not only one way. The market can come close, and instead of finding a resistance, they just go straight up. That's one way it can do that. There's so many ways the market can, and you'll find that as long as it is not uniform action, that's all you need to know. As long as it's not uniform action, that's what you need to pay attention. It could come here, form uniform action, go below, and give you a sell signal, and you might actually even bite. This might be good enough to tell you to take the trade, but the market can do whatever it wants. Sometimes I've seen them, after a couple of sessions, come back and break out. Okay, so you have to respect that you have to use a stop even in this method, because there's no guarantee that a strategy is going to work every time. Or let's say the market comes here, doesn't form any uniform activity, and does this. You see, there's no uniform activity here. Oops, there's no uniform activity in this period, because the stock just went straight up. It never went back below our uniformity line, which means that the stock was a buy at that level. So let's take a look at some examples. Let's take a look at an example here, ERX. We're taking a look at a weekly, and so let's go and see. So we are trying to find out where the uniformity line can be for a stock here that has been gradually moving higher. So what we do is we go find out where the breakpoint took place off this high. So there was a slight high there and a shallow pullback. So you want to find periods where the stock did pull back to find out whether you can find the next sell point. So if we take a look, we see that there was a break somewhere there to a straight line, and you can see that on this chart, which looks a little bit busy now. Once it came, after breaking down here, it came back and touched that high, which is this high here. So anybody who was watching that with uniform activity would have known that the possibility of the stock pulling back was high, and it did do that, moving from about 90 all the way to 70. That's a good drop. So let's go back and find what to do. So we come back here months later, and the stock is back to that level. Of course, the principle of uniformity tells us to expect the possibility of hitting that line and rolling down, which would be another sell signal. Fair enough, right? We know that. If that shows uniform activity at some point here, then we want to be out of that stock. And uniform activity can come in many shapes. If this is the uniformity line, you can get uniform activity to the line like that. You can get uniform activity like that. You can get double tops of this nature. You can get humps. You can get sharp V-type formations. So this line can give you many types of uniformity. The idea here is you just want it to be uniform to your eyes. Sometimes it's not perfect, like maybe it could be something like this, which doesn't seem like uniformity, but in a way it is, because you can split this in half and equal distance. So that's uniform to your eyes. So there are many types of uniformity. So by the time the stock comes back to the break point there, you are looking for any type of uniformity to tell you that it's a sell signal. So let's move forward about a week after this to see what the chart looked like. Let's go back to the end of that week, and by the end of the week, the line we had drawn was here. You can see at the end of the week, that's where the stock closed even though it was making new highs, if I was trading this at the time, I would be very skeptical of the breakout, especially if we have uniform activity back below the line, and if the price does not hold above the previous weekly closing high around 90. So I would look for those two things: a failed breakout in price and the RSI rolling over with uniform activity. And it doesn't have to be the next week, just as long as uniformity is observed at some point in the coming weeks on this one. So let's take a look here, and you see here a week later, at the end of the following week, we have our sell signal. So this is sell signal right there, because you got perfect uniformity and the price also very close to breaking below the previous weekly closing high. But I would say even before this price break below the previous weekly closing high, the key of obviously was the uniformity breakdown there. So that's a sell signal. Let's fast forward a week later and take a look at what happened a week after that. You can see very clearly that the stock now, so this is our uniformity line. Take a look at that. So a couple of things here. Number one, if you had gone short, then you have to have been stopped out, because the stock has moved from about 89, 88 all the way to what, 103 in 1 week. And so it should have triggered some stops, and it can get frustrating, I do agree, but the market is never moving in a straight line, and it does frustrate. It's just how the market is. And so you see here, what was uniformity gave us 1 week down, but now we are back again. So a couple things here. If you're trading this live, is what happens if it does something like this the following week, back below the line, then that becomes a double top and confirms that this is a sell signal area, if you get a movement like that, which is likely. On the other hand, you know that if this continues holding above the previous uniformity line, you know that if it continues holding above this line with a continued move above that and no uniformity is observed, you know that the stock is going to be moving higher. And it's a subtle observation, but you know for a fact that because there was no uniformity, now the stock is going to be moving higher. So let's go take a look at what happened a week after that, okay, so a week later, and you can see what's going on here. We still continue remaining above our RSI resistance or uniformity line. So even though here at the close of this week it looked like it could still have uniform activity, you're very cautious, because it looks like forming uniformity like that, because what the stock has done is, let me show you what the stock has done. So the stock, now we are talking about this period here. The stock had come, hit that line, come back, went higher, and now seems to be forming a straight line. Now, it is very difficult to envision uniformity out of this action, unless somehow the stock can do something like that, which is hard for me to see. That would be uniform action back below the line. And so you just look at the way the formation is. There's no uniformity, looks like to me, and so you have to be a little bit thinking that the stock could actually move higher. So let's fast forward and go a week later, see how this is what I was talking about. So now the stock has even moved higher, and it has moved above 69.1. So there's no uniformity taking place here. So you know that this is a stock that is wanting to move higher. What should have been a sell signal has not been respected. The market is saying it wants to move up. That would be my thought process on this one. So let's now move forward. Let's go back to the end of the month, just so that we can continue here. And you can see that that was correct, because there was no uniformity. The stock continues holding above the previous RSI line, like we've learned. Anything holding above the previous sell signal line means that the stock moves higher. And that was good knowledge enough to have kept you in the stock, or at least know the stock was moving high from the mid 90s and now trading at 110. That's good enough for a swing trade if you're a swing trader. Now let's go and take a look at this from, so this is now sometime May of 2014. Let's take a look at the current chart, live chart, and you can see that the period we were talking about was here. This is what we were discussing, and the stock stayed above the line, above this sell point line, between April here, which is this here, between April and sometime end of July, somewhere here. So that kept the stock from 95, 96, 97 all the way to about 135, just because we understood that uniformity did not take place. And you can also see that if we continue extending the line, the uniformity line continues being respected by the stock, but only after a good move, because sell signal here, sell signal here, okay, an attempted sell signal here that failed, so it was a buy signal and the stock moved higher. But now we come back, and once you break below the line, it was this sell signal, and the stock, take a look at how this was a big down week, and then you come back and the same line shows uniformity again, which was this high there. So this high is this uniformity. So we can see here that even uniformity is being respected by the same line, but down the road. So when you get uniformity, it's a sell signal. When you don't get it, it's a buy signal. Hope that makes sense. Now let's take a look at another example, ERX, this time on a daily. But before I do that, let's take a look at the markets. I want to show you that even in the current market situation, there is an opportunity here for either uniformity or a breakout. Let's see whether we can get that to pull up. So this is the S&P 500 daily. Now this was the high, and we had drawn a straight line and have been watching this over the last 4 or 5 days. So you see where the market is trading. This is early morning, and what my thinking here is this is very easily could turn into a sell signal, because it looks like to me the market wants to form double top on the S&P 500. So we are either going to get double top uniformity resistance, which is going to suggest a drop in the market, or, and this is where the failed uniformity can come in play, what I am observing here is, what if the market actually decides to start moving higher like that over the next couple of days? If it does something like this at this point and there is no uniformity, then that's going to tell me that the market is actually preparing to take off to the upside. And the same thing can be observed by taking a look at the Dow. And you can see here that the Dow is actually on the very top side of failing to hold uniformity. So take a look at what the Dow is doing. So we haven't concluded this day. So if this day turns out to be a strong push to the upside, and let's say by the end of the day the market has the RSI, for example, back above 69.1, that would suggest that there is no uniformity being formed. And that subtle observation could suggest to anybody who's watching that the market is actually a buy and not a sell. So we are sitting here at the edge of our seats, at least I am, trying to see what the market is doing here. Are we going to find resistance at the uniformity line and a good sell signal there? So the market does need to turn around over the next 2-3 days and show uniformity like that. That would be a sell signal. But if it doesn't, then it's a buy signal. Let's take a look at the NASDAQ. Daily. And these are daily charts. So you can see on the NASDAQ, we already see that there is some uniformity sell signal, and markets tend to move together. So because the NASDAQ is already doing that, I wonder whether the Dow is going to do the same thing and the S&P 500. As of right now, this looks like a sell signal on the NASDAQ. Okay, but I am also aware that it is very likely, if the market chooses to see this move above the line, and what was supposed to be a sell signal has been rejected by the market, and the market moves and trades higher. So sometimes it's good to wait for everything to form. In other words, sometimes it's good to wait. Instead of taking your trade there, wait for it to be confirmed, let's say with a day or two, where it shows clearly that there is resistance. So we are watching that to see whether this is where the market stalls and a reason to go short. Also, this high, and don't know that you remember, but during this high here, we had actually used the uniformity principle, because the market had come back and the Dow at the NASDAQ had hit that level, which is uniformity, coming off the previous short-term high and a shallow pullback. And actually, once it came back there and stalled, we started looking for sell signal, and actually that was correct because the market did go down. Let me show you another, and it is the Russell 2000. So this is current market situation where we are trying to use the principle of uniformity to tell us what to do. So this is the Russell 2000, and that's the high. Let's go figure out where it broke down. It broke down, the RSI broke down, so you can see that's where the RSI broke down. We draw a straight line, and this has been instrumental in telling you when to get out of the Russell. There was a triple top here, and as the market was making higher highs here, we were skeptical because the RSI didn't move above our line, the uniformity line. So that was a sell signal, at least warning sign that this, not, remember, this took place over a period of 3 weeks. So this is very frustrating if you're looking for a turnaround situation, and for 3 weeks or so, maybe even 4 weeks, the market continues making new highs while the RSI is not moving high. So that was tricky. But eventually you can see that led to a sell-off. Eventually you come back and come close to the line with a double top, which is this highs, and a very serious pullback. And so over the last 3 weeks or so, we've come back to the same general area. So resistance, which has been shown, if this continues being the look, and if it drifts lower off the line like that, then this is a major high. At the same time, we have to be aware that if it comes back and does not respect uniformity, and for example recaptures that line, let me draw that again. I know the video is going to get a little bit lengthy, but I want to cover this and exhaust this subject because it's an important one. So you can see that this is already a sell signal here, but we are aware that if uniformity is not respected and the market comes back and takes that out, as we have seen in a prior example, then this becomes a buy signal if the market does not have uniformity. Uniformity is a reason to act. Non-uniformity is a reason to expect the exact opposite. In this example, the exact opposite would be to buy the market if it breaks out above our established uniformity resistance line. Hope that makes sense. So let's go to the ERX daily as we continue. And what we have here is a daily chart for the ERX, and we're just going to discuss. So we had a nice low here, about 75, and you saw the stock move from the lows of 75 all the way to 135. That's a big move for the ETF. So we know that that movement in price began during this RSI breakout. So we are using the stock to tell us how to trade the stock. And so we know that was an important RSI move. We draw a straight line. So we come here, we see that it held with uniform activity to the line, to the uniform activity, and the line held, which was this lows, and eventually we had a short-term move. Not a very strong move, but it was a short-term move. You didn't lose money at that instant. Let's continue. you see here again, it comes and holds, which is this lows here, and you had 2 days of a rally. This is a daily chart. You had 2 weeks of a rally, so that was not bad. But now take a look at what happened when uniformity failed. Here you had uniformity, which was a buy signal, but you come back after a couple of days and break the line. I hope you can see that. So you break the line, and once you do that, you see that that is no longer uniform action. The break there, that break, hope that makes sense. There was a break, and the same line became resistance, and I hope to show you that. Let's take that off and show you. So uniformity line, so you're looking to get long on the stock with a bounce, but take a look at this. It came back, broke that line there, and that line became resistance. So what was a buy signal for uniformity was rejected. So at that particular point of rejection there, which is this level there, the stock was a sell signal, was giving you a sell signal, because what we are saying, what I'm saying is, so there's a line as an example. This line has been used previously as a bounce, comes back, bounces off it, comes back, but now does something like this, and instead of moving above the line, it's rejected. So that is a failed uniformity movement. So that point becomes sell signal, which is exactly this arrow here. So let's do that again. Is exactly that point. That's a sell signal because uniformity has been rejected. Make sense? In other words, if the stock had gone something like that, that's uniformity. You want to buy. You buy at that point. But what has happened is what should be a buy signal is rejected by the market. I hope that makes sense. We come here, something like that, and this is rejected at the buy signal line. And so that's what happened here. And that was a price of about $100 when that happened. Stock has gone all the way to trade in the higher 50s just because of that subtle observation. When uniformity is rejected, this is what you get. You get a movement in the opposite direction. Here we're looking for buy signal, but the market gave us a sell signal because uniformity here was absolutely not formed and it was rejected. Let's take a look at another example. We're going back now and taking a look at an international market, or at least in the Asian market, South Korea, the Kospi, and just the same principles. This is sometime in middle of summer 2014. We know that was the high, and so we are looking for uniformity, and the break took place somewhere there. I guess you can draw it a little bit lower, like that. And you can see that it did give you, since that was a high, it did give you a sell signal short term there before a shallow pullback. Again, came back here with a double top, uniform, that was another high, shallow pullback. So you know that if it comes back to that level and finds resistance, it might be another short-term resistance. So let's move on here, and this is now a week later, and we still have the chart looking like this. Now I'm just going to keep going week by week to see what it looked like, and you see it's getting very close. So if it finds resistance and stalls here, you might be at least aware that the stock could not or might not move any much farther. But if it breaks out, you know that there could be a reason for the market to push it even higher. So let's go to the next week, conclusion of the next week. And so now after this week, we see that I probably should have gone back a couple of days. Let me go back a couple of days so we can try and capture the actual. Go back. Let's go back to I guess it took 1 day to break out. So hold on, let me go back one again, see whether we can get this time correctly. Okay, so what we have here is, of course we were expecting resistance here, but you see what happened is tell you what, give me a moment here because I wanna capture this pretty good. Hold on, I want to show you what I'm getting at. Okay, so here we are. There was resistance being expected there. The stock has come back to this general area, so you're expecting either a breakout or resistance. Okay, and so you're watching that, not knowing what to do. So let's go back to, and what happens that while you are watching and waiting, the stock actually breaks out. So this now becomes a buy signal and not a sell signal, because what should have been resistance has been violated. The stock has actually broken above our resistance line. There is no uniformity taking place. At this particular point, you have to assume the market wants to push it higher. So that was in early or late July 2014. Let's go to the current chart, and we see that that period we are talking about was here, and that took the stock from 2020 all the way to 2090. So for a market, that's a big move. But what happened is, take a look at this. Eventually, what's really odd is this is what I was talking about earlier. So let me get rid of all that. This is what I was talking about earlier. Sometimes you're going to have to adjust your visual understanding here, because in my opinion, and this is just because I've done this for a long time, this is uniform activity. I know it's not perfect, but in a way it is. It looks something like this. I know it's not ideal, perfect, but to me, in my eyes, it looks like it's something like that, just if you average it out. And I would take this after all this nice move here, when it comes back below the blue line. So I'm gonna draw that again. I know the video is getting lengthy, but we are trying, or not trying, we are learning here how to use the reversal signal there. To me, this is uniform activity there. And so once it breaks back below that, it's a sell signal. And to prove that is, this was the sell signal once it moved below the line, and it has never been back to those levels here. And also you can see that since then, it's become sell signal every time the uniformity line is respected. The market continues making highs. So that makes sense, right? That the same line that we were using actually eventually was, even though it gave a nice short-term breakout from here to here, once it moved below the line there, it was a sell signal. And since then, every time the market has come back to that line, you've seen a short-term high in the stock. So uniformity continued. Hope that makes sense. Now there's another example on this chart, and it's on the way up. So we see that this was the low, and the stock had a nice run. So we figure out where the movement began, and you can see that there's a movement. If you follow where the movement began, it was somewhere here. All right, and so I'm just gonna take this movement there to a straight line, something like that. Now it's always good to test your lines to see whether they make sense, because the stocks tend to talk to us. And you see here, support at the line, perfect entry for a low, perfect entry. I mean, can't get any better than that in timing. Uniform activity below the line and back above it. That's not even debatable, right? Perfect entry, my friends. Perfect entry. You come and touch the line, perfect entry. But now take a look at what happens. Down the road, here, we come and just slice through the line, and which is this sell period here. by not holding this support right there, by not holding there, that was a sell signal, because what has been support has just been sliced through. And you know that at that point you have to be very careful with the stock and maybe even join the selling crowd. But that's what I'm saying here is there's no uniformity when uniformity doesn't take place, and if you are not sure whether it was going to bounce up. So let me show you what I'm saying. Let me show you what I'm saying is, so this is the line that we've drawn, we know that, and so this is the line now. So at this point there, the stock was looking like this. So you don't know whether it's gonna bounce up and do that. Hold on, let me change colors here. Let's go with green. You don't know whether the stock is gonna bounce and have uniform activity, but actually what ends up happening is, hold on, is instead of, so it goes like this, it continues trending lower. There is no uniformity, there's no bounce, and this is this movement here. It just continues drifting lower, which is this movement here. So because there's no bounce on the line, guess what? You have to assume that that failure to hold uniformity was a sell signal. So because of that, so let's take a look at what I'm saying here. And all I'm saying is, it's very simple actually. I'm sure by now you get the gist of it. Just want to make sure that I keep so this is, so we find our entry on the RSI, draw a straight line. Every time you bounce on the line with uniform activity of any kind, uniform activity like that or like that, or any type of uniform activity support, that's a buy. In this last example, we just did not hold. We went through the line and continued drifting. So there was no uniform activity, which meant that that particular point on hindsight, or if you are watching it live, was a sell signal. Hope that makes sense. And we are also saying that on the way up, once you find your previous sell point, every time you find resistance, any type of resistance with uniform activity, even something like that, uniform, or even we've seen something like that is uniform. If you ever come back and just do not show any type of uniformity, and let's say you just do that, then this was a buy signal and not a sell signal. So that's what we are saying. So this is a buy signal. Either you get uniformity for turnaround situation, or you get the opposite, which is either buying or selling depending on where you are on your charts. So as I continue recording the video here, I want to go back to the daily charts for the markets, because there's a teachable moment here. And what we see here as of right now, with about only 1 hour, actually 45 minutes of trading today, you see that the market seems to be on the S&P 500 showing us the possibility, we haven't seen the close of the day, of a double top, which would suggest uniformity, which would suggest that this might turn out to be a sell signal, unless the market is playing tricks. And the market does play tricks, so we have to always be watching for those tricks. You can see the Dow as of right now. We have a lot of trading hours to go before the day is over, and this is where we've been expecting resistance. So the market does need, over the next couple of days, to confirm resistance by showing that type of formation, uniform activity. And go back to the NASDAQ on the daily. Just want to use this, and you can see on the NASDAQ here what we have is we've already seen the sell signal like that. So it needs to confirm this by continuing. So this is a live example right now that if this is a major high, then the market does need to be trading well off the sell signal line, confirming that this was uniformity. Otherwise, it could be a trap, in the sense that you are aware that if it recaptures back above the blue line and trades in this general area, then that's going to be a buy signal. Right now we are looking at it's the early sign of a market that wants to go down. So take a look at the transportation index. And you can see here it too is around that area where the RSI could either be support, so break point to a straight line. You can see it is either going to show us a double top and a reversal lower, or it's going to have enough strength and momentum to defy the uniformity and start moving high, which is going to be a buy signal. So we don't know which way it's going to go. Let's take a look at one more, which is the Russell. And just like the Dow, it is either going to give us a sell signal with a reversal right now in the next day or two by moving lower, or enough momentum to build above and trade in this general area. So we'll see which way it's going to pick. So this is a live market as of right now. Remember, this is just for the sake of the video having some relative information. This is November 6th 2014, Dow trading in these levels, Nasdaq, S&P 500. So either the market is making a major high here, or it is setting up, cooling off for a few days and then breaking out. And we can take action. Right now we are positioned short by playing the short ETFs because of anticipation of uniformity and a pullback. If the pullback doesn't take place, then we'll know that the market is a buy. And so what we see is that nobody should ever be cocky in the market. You can never be too confident about what you're seeing, because as we see, the same line that the market could use for a sell signal with uniformity, so that's a sell signal, the market could also use the same line for a buy signal. So what can be sell signal can be buy signal, and it is very hard sometimes to figure out what the market is doing. The takeaway is, because you are not arrogant and because you give the market the, you let the market do what it wants to do, you become a better trader. I think when we become too sure of what we are seeing and what the market is going to do next, we make lots of mistakes. I think by respecting this uniformity principle, that the same line can be used as a sell signal, in this particular example as a sell signal there, and here as a buy signal here, tells you that you have to be very aware the market can change its mind. I like that view. I would rather not be sure, because if I'm too sure, that means that I am making a lot of strong bets on where the market is going. But because I know the market can change its mind and I see it doing all that all the time, I have to be aware of money management, and also at least I know that I have to have a stop, because the market can change its mind. It's only when we're too convinced that the market is going to go in our direction that we place too big of bets, and we are also arrogant in the sense that we don't place stops and the market goes against us. I think the uniformity principle here confirms that the same line can be used by the market with amazing beauty. But what I mean by that is, I have seen this nice symmetrical move to the line. I mean, amazing action. How the market does this, I don't know. Over and over again, the market uses the same level uniformly to give you sell signals, and yet the market itself can come back to the line and just break above that, becoming a buy signal. So you have to be careful. You get sell signals, you get buy signals on the same line. So be aware that you have to respect what the market can do to your portfolio, and nobody should be very, very sure that the market is going to form uniform action, because sometimes it doesn't. All right, let's take a look here at the KOSPI, South Korean market on and this Why am I talking about the Kospi? Just random stocks and instruments I saw while I was looking for examples. So let's go with it. So we see here in between 2007 2009 there was a break of this level, which was this high. Now you say, how come I'm not using this high? You can use either. There is no hard science here. You are using the stock's own behavior to figure out what the stock is trying to do. How simple can that be? So here I'm just going to use this one because it helps me explain the next move. There. Okay. And I can also extend this. It is always good practice. Maybe I should say that at this point. It is always good practice to extend your line backwards to see whether it makes sense. This line was a sell signal here, which is off the high, so I know that's a good line. The line makes sense. A good line should make sense going forward and make sense going backwards. Hope that makes sense. So always backtest your line. And because I drew the line here and at first it was going this way, I am backtesting it by going backwards. And I also see that there was uniform activity below the line and back above it there, which was a nice entry point. So even in going backwards, the line makes sense. I mean, that's beautiful. I mean, that makes me happy right there. Uniform activity below the line, back above it, which is this nice entry point and a nice swing trade. Extend the same line. And again, you see the same type formation. In fact, you see two things. You see uniform activity, a Sosa type formation, which was this lows and a move higher. Okay, so this move there was this breakout, and that was good for a very strong uptrend move. Okay, and so the line makes sense in telling us buy signal, sell signal. And you can also see here there was some type of uniform activity above the line and back below it, which was this sell signal there for a 1-2 week drop there. So the line makes sense. So we know the line makes sense. What we are seeing here is, why do I have this here, is when the stock comes back to this level sometime in April of 2009, you would have been expecting uniformity and a sell signal. Why do I say that? Keep in mind, this was a major bear market, the bear market of 2008. So you know that everybody's a little bit anxious about the market going back to its bearish ways. But take a look at this. What's going on here is this: the market fails to form uniformity. There's no uniformity action here, none. In fact, there's none, and it actually comes and finds support on the line. So I would say that's a buy signal, because if you are expecting uniformity and you are looking for reasons to go short the market, you are waiting for all these weeks here, probably 1 or 2 months, and the market fails to form uniformity. So you have to start thinking about changing your mind, because the market has refused to form uniformity, and that is a buy signal. In fact, let's go back and take a look at, let's go back and let me see, change the time period here to end of the year. So let's go to December. By the end of the year, see what happened to the chart. So failure to have uniform activity was actually telling you buy signal. So remember, the line was, we were talking about that trade there, and my thinking was because the market found support there and was refusing to go below the line, that was a buy signal, which happened to be these lows here. And ever since that analysis, the market had a move higher. So failure to observe uniformity tells you the opposite is going to happen. Makes sense? And so we see that that makes a lot of sense. Extend the same line, and you can see that uniform activity twice, the same line back above the line, and then also uniform activity back above the line. So I would say, if I was watching this to me would be a buy signal, because what was the previous sell signal is now acting as uniformity support on the way up. Now I hope that makes a lot of sense, because it is this subtle understanding of the dance taking place that you get to position yourself very well. It is this understanding of how the market is behaving on a predetermined line that the market itself drew. You remember, we didn't draw this line. We are using this break point off the high to tell us that this is a major line for the stock. And the fact that it is doing uniform dance, it's doing something like this. It is dancing below this, coming back up, and then doing that. It is using the line, weaving below the line and back above the line in uniform action. That's a good dance. I would say that's a buy signal in my book. So let's go fast forward here, go to the next year, maybe summer. So let's go 2010 now. Go to maybe mid of that year of 2010, and let's go see what we have. And where are we? Okay, so that would have been a buy signal. Looks like it didn't work out, and it happens. So I was talking about this here, to me was a nice buy signal because it was somewhere here, and you got a swing trade out of it. Not the best, but it was not going down after that dance. But what's interesting is now we have uniform activity. I know this is taking a while, but don't worry about it. We have uniform activity above the line and back below it. So even short term, that's a sell signal, which is this sell signal here, and that's accurate. And then we have another uniform action. In my opinion, this is another uniform action below the line and back above it. So this now becomes short-term entry level on the same line, which is this entry level there for a swing trade, which was positive. And again, we extend the same line, and you can say this is uniform activity, so that's a sell signal, which is that sell signal there. And the stock did go down for a couple of weeks, maybe for a month, or the market did, and so on and on and on and on. I hope that makes sense. This is very interesting actually, because let's go back to our clean example. And what's going on here on this particular chart is, and I do apologize for taking a long time explaining this, but it seems like every time we have uniformity back above the line, it's a buy signal for the market. It comes back, does a uniform action, that's a sell signal. It comes back with uniform action back above the line, okay, maybe something like that. But this move back above is a buy signal because this is uniform action. This is uniform action. Oops. This area here is uniform, so that's a buy signal. And again, it does the same thing with another. I'm just drawing uniform. So this becomes a sell signal. The same line giving you buy signal, sell signal, buy signal, sell signal. And that's what that Kospi market was doing between 2009 and 2010. Now, I just realized something else, which I might have forgotten to mention, is we had drawn this line. Remember, you are using the stock to tell you how to trade the stock. Nothing complicated. It's a very simple analysis. So, but this was the secondary high. The main high was here. So if we want to find the main sell signal, so let's decide one thing. Because this was a secondary high, this is not the most important line. The most important line is the one that connects it to the high. So the importance of the line is based on the importance of the sell signal. And this sell signal was here off the highs in 2007. So that's the break. And so this same chart has another sell signal, which is here. Hope you can see that. Makes sense? And so it looks like it makes sense because every time we break below that secondary blue line, let me change colors here so we can, let's go and just make it red. So there was a break. This is the main sell signal on this chart. Lots of information here. So this was every time you come back to this level and stall back below the red line, you get a high there. You come and hit that with uniform activity. You touch the line, which is uniform activity, short-term high. You come here, you do the same thing, short-term high. So this doesn't disappoint you in any way. So I forgot to mention that we have two lines, and most charts will have more than one line. It is your job, our job, to find the exact sell signal line. Some of them are going to be primary, some of them are going to be secondary in terms of their importance. Importance is based on a major low or a major high. So what I've done here, fast forwarded, now we're in September of 2010 as we continue using this one chart, for example, and that's the primary sell signal line. So what I want to look at now is the idea that the stock is back to what could be sell signal. So if you are trading this market sometime in September 2010, you can see that it can either do two things: stall here with uniform activity, which would be a sell signal, or it can actually break out and not form uniform activity, which would mean that it is a buy. So you are watching it to see whether you should take the trade or not take the trade, or at least if you should have a sell signal waiting or some stocks that you might want to short in that market. But the key here is you want to find out whether uniformity is going to keep you in the trade or whether it's going to stall. Very important thing to determine. So let's go and see whether we can go and see what happens. We're going to go month to month. So let's go, that was end of September. Let's go to end of October. And so here we are, end of October, a couple weeks after that. And so there was a break there. That's our line, because the line gave us the major high. And what do we have? It looks like as of this end of the month, this is uniform activity above the line and back below it. So I would look to start thinking that this wants to go down. Hope that makes sense. This is uniform activity above the red line and looks like back below the red line in what looks like a inverted saucer type formation, something like that. So this movement here back below the red line is a sell signal because it's uniform activity. So let's fast forward and go to the end of the next month to see what happened, whether we had uniformity or not. And it looks like the market was choppy, but we still have uniformity, I would contend, because what's going on is we've gone above the line, uniform activity, above the line to the line, uniform activity, and now above the line and back below the line. So all these three instances are uniform action. That would be how I would look at that. So to me, this is uniform action. This move here is uniform action to the line, and also this is uniform action. All of them separately are uniform action. And so by the time it comes back and breaks below the red line, I would say that's a sell signal. But let's see what happened. Let's go back and take a look. And let's go back to now to the end of December. And you see that the stock actually did not confirm uniform activity. In fact, the same line that was giving us a sell signal became a buy signal. So this is where you'd say, you know what, this market is holding. It is not going, it hasn't gone below, even though there has been uniform activity back to the line, it hasn't confirmed it. In fact, now it's bouncing off using the line for support. So as we've seen in this video, sometimes what the market does, like in this instant, there was something like that. It uses this same line as an entry point. So this was the perfect entry point, which is this level there, which is this period here, which also happens to coincide with the price breakout on the weekly. So the stock was a buy there based on failure to have uniform activity, and that should make sense by now. So that was a buy signal, and that could be responsible for this move to the upside. So let's take a look at so this was end of 2010. 2010. So let's go back now to end of 2011, 1 year later, to see whether how good that buy signal was to the upside. Now, hold on a second, let me get that right. I know the video is lengthy, but I want to make sure I exhaust this subject. And so a very subtle observation could have kept you in this market. We're talking about this was the uniformity rejection there, which was these lows here, and the market did actually have a nice couple of weeks to the upside here. And it is only until it broke back below, and this is just, for someone like me who's been using this for a long time, it makes a lot of sense when I see this everywhere. You broke below the red line there, which was this high. You came and made a new high in the market, but this was uniform activity to the line and back below it, so that's a sell signal. Very easy to identify after it's been formed. That was a sell signal. The market comes back again and hits that same line, touches that same red line, and that's another sell signal, which could have protected you before this plunge. So understanding that this was support there kept you in the market. But once it started failing, it failed there, get out. It came back and had uniform activity there, you want to get out. It came back and touched that line there and was rejected, get out. And that was good enough to protect you from the huge downside. In the current market, or at least going back to the end of 2012, there was also another secondary break signal. So this is the main signal, comes off the high there, okay, which also is now, this is the main high on this chart, so we can say that the break took place there. So this is going to be the new high down the road. If the stock ever comes back to this break point, you can use that. But there's a secondary sell signal, and I want to show you that you can have a secondary line, and many secondary lines is the break of this major trend line. There was this plunge, important plunge. So the stock is telling you that this is where things went wrong. Draw a straight line from the break point. Let me use the red line. So break, draw a straight line, and it looks like recently, or at the time, this was a double top resistance uniformity, which was responsible for these highs, and the stock did or was under pressure. So I want to go back and 1 year later see what happened on that secondary line. So yes, the video is lengthy, I get that. You might have to watch this in. And so secondary break, straight line, was resistance here and here, which was these highs. The stock comes again and breaks out above our secondary resistance line there. The movement above that secondary line, we are using the stock to tell us what to do. If it finds resistance on the line, it's not going to move high. But if it breaks out like it did beginning of 2012, which was here, it has a short-term move to the upside. Extend the same line, and this is what I was saying about adjusting your visual view. This looks like uniformity because it goes above the line and back below it on average with what looks like a dome type formation. So the movement back below that red line is a sell signal. If you had known that, you would have been out of the market during this plunge, and so on and on and on. And recently there's another short-term sell. So off this high here, you can use that information. So this is this break, RSI break there, and a secondary sell signal. Why is it secondary? Because it's not based on the high. This line is based on this price high, which is not a major high. The major high is here. So this is a secondary line, but you can see it also makes sense because it gave you a short-term high and rejection, which is this high. Another uniform activity sell signal, which is this high for a short-term move. And you can see here at the time coming into 2013, if it found resistance there, it was gonna go down. I've been saying that it is good to always back test your line. Let's go and back test this line and see whether it makes sense. You see that there was a break below that line there, which should be a sell signal, which is correct, which is there. And uniform activity entry level there because of this, and it gave you a short-term entry level for 3 weeks of a rally, and on and on. It was support here, which is this lows. So you can back test the line to see whether it makes sense. If the line makes sense, then the line is legit. If the line doesn't make sense, then the line is not legit. Because of this knowledge of this secondary resistance line, I have been calling this market recently as having resistance throughout the last couple of years, because every time it comes to this line, it stalls. And even this most recent high, I had discussed the idea that this was a high short term, and that's correct because we've seen that it's dropped since then. Very simple reasoning. You're not complicating your analysis. You know that if you come back to the resistance line, it's a sell signal. It is as simple as it gets. Also, there's another view. This multi-year line, multi-year price information is coming off the lows here in 09. So this was the entry level there in 09, which was off the lows here. Important high, important low. Draw a straight line, and now we are looking at the opposite. Every time we have uniform activity to the line, we get a short-term low. Uniform activity there, short-term low. Uniform activity here, short-term low. All this was successful, and recently uniform activity to the line. So when the market came here and hit that line and started bouncing, I speculated that it was going to see a short-term low, and that's correct. It had 2 weeks of a rally, and we'll see what happens next, or at least in terms of what's going to happen. But we know for a fact that if it comes back to this line with uniform activity and holds, it's always a buy. It's been a buy. At some point, maybe it's going to come back here and fail to hold uniformity, and it's going to become the first major sell signal since 2009. Let's take a look at another market, and we're going to go back. Remember, you can use this on any instrument, so don't get too obsessed about what the market is or the trade. This is Japan, but you can use this on any market. Japan weekly 2012. So there was a break here off these highs and a major plunge during the tsunami, and so we know that's a major sell signal area. Draw a straight line, and we can see here that this is uniform activity. Now it is not perfect, but it is as close as you can get to this type of dome type formation. So I would call that uniformity, because it's uniform and it makes sense. It makes sense because even after that, you get a plunge in the stock. So it makes sense to me that that would lead to a strong move. From that sell-off, you had this strong move, and back testing it shows that this was also a strong sell signal because it was responsible for this major plunge. So you know that you come here end of 2012, if you find uniform activity to the line, it's a sell signal. We know that. Okay, so you're anticipating sell signal or non-uniformity and a buy signal. So two things, either uniformity, sell signal, or non-uniformity and a buy signal. So I want to move and see what happened 1 month after that. Let's go to end of that year. And guess what happened? What was supposed to be an area of potential resistance was actually rejected by the market. At that point, there's no uniformity. So that actually is a buy signal somewhere here. And that market went straight up. So this is a perfect example of what happens when uniformity does not take place. You get the opposite. You are expecting some type of resistance, trying to see whether you should go short, but the market rejects that idea and just moves straight past the uniformity line. So that's a buy signal. This is a perfect example of what happens when you don't get uniformity. And in fact, if you go back and actually, let's go back 1 year even after that, take a look at what happened. So this was, we were expecting uniformity here. The market rejected it, which was this entry level somewhere there at about 9,500, and that market, just because of the subtle observation that there was no uniformity, was responsible for this major upswing. Absolutely important information. The failure to hold uniformity could have warned you that this market could actually take off, and it did. I hope that makes sense. So let's go back to the current chart for the S&P 500. First and foremost, take a look at the daily. This is now about 30 minutes since the last update, and you can see here that there's a major fight going on between uniformity, either to form uniformity or not to form uniformity. It's a very critical time for the market. Either we are going to find resistance on that line and go down, or we are going to break out and push higher. So that's what the market is doing right now. Take a look at the Russell. This is a major fight going on. This is not something that just takes place like straightforward. There's always a lot of trepidation, and that's why as a trader you just have to observe and know that one way it's going to have to make a decision. You can see here for the Russell, it is either going to find support on this line and start moving higher, or it's going to break down. So even though we are playing it short, there's the risk that the market starts using this line as support and starts trickling higher, and if it does, you have to switch your positions and go long. It's a very simple distinction there, but it's a major fight going on. About 30 minutes ago the market was in the red, now it's back in the green, and it's because there's a fight going on to establish either uniformity or resistance or breakout, and we'll see which way the market is going to decide to pick. Okay, so let's go back. I want to show you one more chart, and we're going to be using the Indian market. So this is the Indian market sometime in end of March of 2014. There was a break off the highs there to a straight line, and you can see that we found resistance prior, which was here, which was this high, and a reason to go short. We came back with double top there, which was this high here, and also we've seen recently, as of this current chart here, that once it hit that level, that was a sell signal. Can it get any more obvious that that was a major sell signal? So you have to be at that particular time thinking short. Okay, I mean, there's no other way to look at that. All right, let's back test this line just to see whether it was making sense. And yes, every time we hit that line with uniform activity above the line, back below it, major high. Uniform activity above the line, back below it, short-term high. Resistance on that same line here gave you a short-term high. So this line is obviously important to the stock. It's not anybody's opinion, it's a fact. All right, so I want to show you what happened here. So we have a sell signal sometime in beginning of March of 2014. So let's go forward 1 week to see how that looked like. Go back forward. Let's go forward at the end of the week, the same week, and take a look at this. What was resistance on Monday? By end of the week, the market had blasted above that. That was a major buy signal. This blast and a rejection and refusing to form uniformity, this here was a major change in your thinking. You had gone short, but once the market rejected that idea and moved above the resistance line, you had to have changed your thinking that this market could actually, instead of going down, like it had previously been doing, instead of double top there, which was this high as here, instead of resistance, and it was looking like there was a sell signal here, the next day the market just took that out. Perfect rejection of the uniformity. You have to conclude at that point that the market is a buy. In fact, it also coincides with a breakout in price above the prior resistance band area. So this was the resistance band area. The market had failed to move above this general area. So there were two things going on: price absolutely blasting above previous resistance, and the sentiment, which is what the RSI is, blasting above previous resistance. This was an absolute buy signal, very powerful buy signal. So let's see what happened after that. So this was sometime end of March of 2014, excuse me, 2014, and that move is responsible for what you see here. This subtle move there and the breakout there. Understanding uniformity, something so simple, so subtle there, gave you this entry point and a reason to change your opinion about the bearishness of the situation, and you would have been forced to turn bullish. And ever since, you see that market has come from about 21,500 all the way to as high as 28. Simple understanding of how the markets behave. Now, I want to show you something else here in conclusion, that the same line can be used even after the fact. The same line. Every time you have uniform activity on the line, you see a short-term low. Uniform activity below the line, back above it, short-term low. Double bottom support on the line, short-term low. Uniform activity here, back above the line, short-term low, and on and on. And every time you hold above the line like you did here, it was responsible for this move. So the line somehow continues giving you even additional information for short-term behavior in the stock. And recently, so the same line. How can the same line give us so much information? Recently, you see that there was some type of rejection here on the line, which was a short-term low. Small short-term low because of a slight move, but the stock has done well ever since it moved back above the same line, which was somewhere here. So this uniformity line gives you a lot of information. But this video is about the failure to hold the uniformity, which is what I want to end the video. So we go back to March again, and once the stock gave you this change in sentiment, this failure to have uniformity, and this breakout, that market was always going to be a strong market. And I'm going to conclude here because this was a very powerful rejection of uniformity principle there. And that was March of 2014. And after that, that's why you have to understand that you had this major absolute takeoff because of this uniformity rejection here and a price breakout. I know it's a lengthy video, but there was a lot to discuss, and I want to end the video by taking a look at an hourly chart, because I've looked at weekly, looked at dailies, I haven't looked at hourly, and this video just needs to make a lot of sense. You can use this on any time frame. So this is the Dow hourly, and I'm using 26 period on the hourly, and you see that there was a major high there. I want to show you how that high was formed. The high was formed after this initial high and a slight pullback. So before this high, this was the high. Okay, hope that makes sense. So the initial high was here, and we saw that there was a break of that RSI trend line, and so we can draw a straight line. So once the market came here and gave this high, and there was a rejection, those of us who were watching that knew that the market was going to pull back, and that was why the market pulled back here. Hope that makes sense. So the previous high led to a break of the RSI. We drew a straight line. Once the market rejected that with uniform activity, that was a major high, and this pullback here was very easy to, not easy, but you could tell that from this resistance on the RSI. Over the last couple of days, what the market has done is come back to the same line there, and there has been no uniform activity back below the line. You can see that the market has actually used this as support. Not my opinion, it's a fact of life that the market is using this as support. It had come here and held. What should have been uniformity, what should have been uniform activity above the line and back below it, was rejected, and the market held. And this was this low here. And so as long as the market is holding above this line on an hour-to-hour basis, the market should be safe. It's only when the market finally cracks below that line that we might get the pullback in the market, which might lead to the market giving us uniformity sell signal. So there's a lot of things going on here. We have the market on the daily looking like it could show resistance, but yet on the hourly, which was the previous chart, let's go back to the hourly. On the hourly, it was the previous chart showing that this is where it's using as support. It is holding above that line. So lots of information here. Okay, if we go to the weekly, let's go to the weekly here for the NASDAQ, because you have to understand all this time frame and how they relate to each other. And what you can see here is that if we take, I'm going to draw this different. So off this high, you can use this previous high to tell us what happened. So there was a break there. Draw a straight line. So you can see why I am personally slightly bearish right now, because we are looking at uniform activity to the line and back below it. So the weekly is showing us signs of resistance. If this is confirmed over the next couple of weeks as resistance, I would expect the market to plunge. Eric Mwade, good luck, peace, and blessings. So if you have any questions, text me, call me, or email me, and I'll be able to explain this principle further. I am out. Peace and